Welcome to Talk Tickers. Today, we're digging into Occidental Petroleum's latest earnings report. And honestly, it's a bit of a head-scratcher. We've got a huge operational win that the market seems to have completely ignored. So let's get into it.
All right, let's jump right into the headline number. OXY posted adjusted earnings of 64 cents a share. Now, to put that in perspective, the consensus on the street was around 50 cents. So yeah, they didn't just beat expectations, they absolutely crushed them.
But, and this is where it gets weird, what did the market do with this great news? The stock moved up just, wait for it, 0.1%. Basically nothing. A flat line. So that's the big question, right? How does a company deliver such a strong operational quarter and the market just shrugs? That's the puzzle we're going to solve today. What is going on here? Okay, so here's our take. You've really got to look at this quarter as a tale of two tapes. It's like two different stories are being told at the exact same time. On one side, you have this story of awesome operational strength, but on the other, you've got these nagging macro headwinds pushing back. And you can see that contrast right here in the numbers. Look at the adjusted EPS, a solid beat. And production, man, it was a record breaker. We're talking 1,465,000 barrels of oil equivalent a day. That's huge and way above what they guided for. But then you look over at revenue and, a slight miss, just barely under what analysts were hoping for.
So why the revenue miss when production was so high? Well, it really boils down to something they can't control: lower oil prices. They realized about $64.80 a barrel. So even though the company itself was running like a well-oiled machine, generating a massive $3.2 billion in cash flow, the price they were getting for their product just wasn't as strong. That really put a cap on their revenue. But honestly, the operational numbers, as good as they were, weren't even the biggest story this quarter, not by a long shot. The real headline was a huge strategic shift that management just announced.
And this is a big one, folks. Oxy is selling off its entire chemical division, OxyChem. And the buyer? None other than Berkshire Hathaway. The price tag? A whopping $9.7 billion. All cash. This isn't just a small move. This is a total game changer for the company's future.
So the natural question is, what are they going to do with all that cash? Well, they've laid out a pretty clear playbook. Step one, take a huge chunk of it, we're talking about $6.5 billion, and just hammer down their debt. The goal is to get their total debt under $15 billion. Doing that completely transforms their balance sheet and, importantly, frees them up to start funneling more cash back to shareholders once this whole deal is done.
And this whole thing brings us right back to that disconnect we talked about at the beginning. That gap between the story management is telling and the story the market is, well, not buying just yet.
If you listen to the earnings call, CEO Vicki Hollub was incredibly confident. She kept highlighting their exceptional operational execution, and she talked about this OxyChem sale not just as a deal, but as this massive milestone that's going to reshape their finances and unlock a ton of value for investors.
And yet, look at this. The market's reaction? Underwhelmed to say the least. Strong earnings beat? Muted. Record production? Muted. A super clear plan to fix the balance sheet? The market's basically saying, yeah, we'll believe it when we see it. It's a classic wait-and-see mode. Investors just aren't willing to jump in until that deal is officially closed and they see exactly what the new shareholder return plan looks like.
So what about the future? Well, looking ahead, management is all about stability. They're guiding for more strong production in Q4, and they're keeping a tight lid on spending for 2026. The message here isn't growth at all costs. It's more like, let's aim for steady, modest growth of maybe up to 2% and really focus on getting this balance sheet in perfect shape.
All right, so let's boil this all down. If you're an investor watching OXI, what's the bottom line? Here's our call on what to expect next.
In the short term, it's really all about these four things right here. But let's be clear, the two that matter most are, one, getting that OxyChem deal closed, which should happen in Q4, and two, what that new capital return plan actually looks like in detail. Of course, everyone's also going to be watching to see if they hit their Q4 production numbers and what the full 2026 guidance looks like.
So, with all that in mind, what's our prediction for the stock? We think it's going to be pretty range-bound for a while. The market has heard the promises, now it wants to see the proof. It needs the hard, concrete details on how exactly OXY is going to return all that cash to shareholders. Until that happens, don't be surprised to see the stock just kind of tread water.
So, our final rating on Oxy? We're calling it a market perform. Look, operationally, this company is firing on all cylinders. They're doing an amazing job. But the stock itself, Its fate is now completely tied to pulling off this huge strategic move. It's not just about closing the deal, it's about what they do after the deal is closed. That's what will move the needle.
And just a quick reminder, this analysis is for informational purposes only. It is not financial advice.